Argentina's peso is collapsing in real time. Trading floors erupt as the currency plunges, reserves evaporate, and inflation rips past 5% a month. Within 72 hours, President Javier Milei burns through $1 billion in emergency interventions, leaving the IMF warning of default. Then comes the shock. Donald Trump orders the U.S. Treasury to step in with a bailout worth up to $20 billion, a sum so large the Financial Times says it drains 2/3 of America's stabilization fund. For Trump, it's not charity, it's a power move, because this deal doesn't just rescue Argentina's economy, it puts Washington in control of its future. Argentina's predicament had been building for months. When Milei took office in December 2023, he pledged to eliminate capital controls and let the peso float freely. Within 72 hours, he devalued the official rate by more than 50%, from 370 pesos per dollar to 800. Inflation, already raging, accelerated further. Official data showed month-on-month consumer prices rose 25.5% in December, the highest since the late 1980s. The government then shifted to a crawling peg, moving the rate by 2% monthly in an attempt to converge with the parallel market. Bloomberg noted that by April 2024, the peso stabilized near 1,100 per dollar, above Milei's own red line of 1,400, suggesting initial success. But growth data soon betrayed the illusion. Argentina's GDP contracted in both May and June of 2024, and by July the peso's slide resumed. The political environment compounded the crisis. In August 2024, leaked recordings alleged that Milei's sister, a key confidant, had diverted funds from the National Disability Agency. The scandal eroded his approval ratings and shook investor faith in his ability to pass reforms through a fragmented Congress. Provincial elections in Buenos Aires delivered another blow when his Libertad Avanza party lost heavily. Investors saw a government running out of political capital and an economy running out of dollars. Milei responded by burning through reserves. Reuters reported that between September 12th and September 15th, Argentina used 5% of its remaining $20 billion in liquid reserves to buy pesos in offshore markets. The IMF, which had conditioned its $44 billion program on an end to such interventions, privately warned that support could be cut. By late September 2025, the peso had entered its third consecutive week of decline. Bloomberg reported on October 1st that the central bank again sold dollars to slow losses, but the peso still fell for the third straight day. The numbers were stark. Net reserves, adjusted for liabilities, had slipped below zero. The Financial Times cited IMF staff estimating Argentina's usable reserves at negative $4 billion, making the country technically insolvent on foreign currency obligations. Against this backdrop, the United States stepped in. Scott Bessent, Donald Trump's Treasury Secretary, issued a statement. "We are sending a message that when governments implement sound policies and align with U.S. values, we will be there to assist when markets move out of equilibrium." The framing was deliberate. Milei's libertarian reforms, radical spending cuts, privatizations, and the dismantling of subsidies were seen as a textbook case of neoliberal discipline. For Trump, the optics of backing a right-wing ally in Latin America had political value. But the mechanics of the package raised alarms. According to the Financial Times, leaked drafts showed Argentina would post collateral in U.S. escrow accounts, potentially giving Washington de facto rights over sovereign assets if Buenos Aires defaulted. Critics called it conditional leverage disguised as stabilization. Agribusiness complicates the picture. Argentina is the world's third largest soybean exporter, and Milei's government in September 2025 cut export taxes to lure an estimated $7 billion back into domestic markets, according to Bloomberg. The policy succeeded in boosting inflows but angered U.S. farmers. Politico reported that Republican senators warned Trump against subsidizing a competitor that already undercuts American grain exports. The contradiction was sharp. Rescuing Argentina bolstered a rival to U.S. agriculture. Yet the market impact was immediate. Reuters reported that Argentine bonds rallied more than 7% in a single session after Bessent's announcement, while stocks in Buenos Aires surged. Still, the peso barely moved. Analysts observed that the rally was built on political expectations, not fundamentals. Argentina's current account had slipped into deficit in the second quarter of 2025, posting a $3.016 billion shortfall according to the central bank, largely due to negative income and services balances. Even with booming commodity exports, the drain of imports and external obligations outweighed gains. For Washington, Argentina is a test case. Trump has frequently spoken about countering China's expanding role in South America. Beijing has invested billions in Argentine lithium mines and renewable energy. By tying Buenos Aires to a United States stabilization fund, Trump effectively inserts Washington into Argentina's financial bloodstream. FT analysts warned that collateral clauses could extend United States influence into mining, energy, and infrastructure. A Pentagon memo, cited anonymously in United States press, even suggested that lithium concessions could shift indirectly under United States purview if Argentina defaulted. Inside Argentina, reactions were split. Milei's economy minister, Luis Caputo, argued the swap line was essential to restore credibility, likening it to the 1982 Brady Plan restructurings. But unions and opposition parties denounced it as a surrender of sovereignty. Protests erupted in Buenos Aires, where banners read, "Dollars for Washington, hunger for Argentina." Police dispersed crowds outside the central bank. The optics were unavoidable. A libertarian president who had promised emancipation from international institutions now stood reliant on U.S. taxpayers. Now, a revelation have forced both markets and policymakers to reconsider. Reuters revealed that the U.S. Treasury's Exchange Stabilization Fund had just $30 billion in liquid capacity. Extending a $20 billion line to Argentina would consume 2/3 of its usable firepower, leaving limited room for other emergencies. That disclosure reframed the question. Was Washington stabilizing Argentina, or was it gambling its own fiscal arsenal on a high-risk debtor? If another emerging market crisis erupted, Turkey, South Africa, or even Brazil, would the U.S. still have firepower left? The question triggered debates in Congress. Some Republicans pushed to cap the Argentine swap line at $5 billion unless the U.S. secured senior creditor status. Others argued that geopolitical leverage justified the risk. Trump, for his part, appeared unwavering. At a joint press conference with Milei on October 14th, Reuters quoted him as saying, "We back free markets when they are aligned with U.S. interests." The comment underscored the conditional nature of the support ideology mattered less than alignment. Meanwhile, Argentina's economy showed no signs of reprieve. Inflation, which had fallen from triple-digit annualized rates to monthly increments near 2.4% in early 2025, crept back above 5% after successive peso devaluations, according to FT data. Bond yields remained punishing. A new 10-year issue floated in September carried yields above 15%, reflecting persistent investor skepticism. Even after U.S. support, Argentina remained locked out of affordable capital markets. The structure of the deal itself added complexity. Bloomberg reported that initial disbursements would not go directly into Argentina's central bank accounts, but into escrow controlled by U.S. institutions. Funds could only be drawn for specific stabilization purposes, with oversight clauses requiring reporting to U.S. officials. For Milei, who had built his persona on railing against foreign interference, the optics were damaging, yet he signed. Faced with collapsing reserves and widening spreads, there was no alternative. Street-level realities remained grim. Inflation ate into wages, hospitals rationed imports of medicines, and gasoline lines reappeared in provincial towns. Protests spread from Buenos Aires to Cordoba and Rosario. For ordinary Argentines, U.S. bailout headlines did not translate into cheaper bread or fuel. In financial circles, analysts debated whether Argentina had exchanged one master for another. Having strained its relationship with the IMF by breaking commitments, Buenos Aires now tied itself to Washington under terms arguably stricter than fund conditionality. FT columnists noted that default clauses in the swap line could convert overdue loans into equity claims over Argentine public assets. Milei himself appeared conflicted. In a closed meeting, according to El País, he asked advisors whether the deal expanded or shrank his room for maneuver. One aide replied, "We may end up steered by the lender we hoped would save us." The remark captured the unease even within Milei's circle. Still, the markets initially rewarded the announcement. Argentina's benchmark Merval index rose and sovereign spreads narrowed. But within days, the peso resumed its slide, proving that confidence could not be bought overnight. The Bloomberg strategist Walter Stoppelwerth summarized it. "This support may be a reset, not a rescue." The story continues in real time. Argentina's reserves remain negative, its fiscal outlook is fragile, its inflation is stubborn, and yet the U.S. has committed its credibility to keeping Milei afloat. The final image is stark. Milei sits at his desk, the treaty draft in front of him, clauses highlighted in yellow default triggers U.S. recourse to operate Argentine assets. Outside the palace, chants echo from protesters demanding sovereignty. In Washington, Trump calls it partnership. In Buenos Aires, some call it surrender. The peso falls again as dawn breaks. And the unanswered question lingers. If Washington now owns Argentina's survival, what part of Argentina still belongs to Argentines themselves? We're glad you're enjoying this video. Please like and subscribe. Check out another video that is now on your screen.